Recently, Economic Times has conducted a survey of CEOs and business leaders of India across manufacturing services and infrastructure sector, and 93% CEOs and business leaders said that India is on the cusp of an investment boom, and 94% of them are undertaking capital expenditure for the next 3 years starting 2022. Some of the key factors include post-pandemic pent-up demand, government incentive for manufacturing sector, lower interest rate, and emerging business opportunities. The demand for various products can be judged from the fact that many companies are operating their facilities at near 80% utilization level. So one thing is very clear. The Indian economy is positioned in a very sweet spot, and it could be the golden decade for the Indian economy. Hence, it is a great opportunity to invest in the Indian economy. So in this video, I want to discuss 5 stocks from small cap sector that can potentially generate high returns for their investors. Please note that I do not intend to show you big dreams of 5 times or 10 times return. I strongly believe that investment in the stock market is a game of patience. And it is not just about generating high returns, but also about the downside protection. That is because a lot of people end up investing in penny stocks with a dream to generate 10 times, 20 times return when market is on the boom, and eventually end up losing money when market corrects and stock tanks. Hence, I strongly focus on investing in fundamentally strong companies that might not generate 10 times or 20 times return in short term, but at the same time, they won't crash 80 to 90%. In fact, any correction in fundamentally strong companies only creates an opportunity to invest more. And it is not that these are the only 5 stocks for investment in the small cap sector. In fact, there are a lot of promising stocks, and in 2021, I have already discussed a lot of those stocks. But I always look at the valuation before investing. And I believe that no matter how good a company is, valuation is very important before investing. Hence, in this video, I have tried to include stocks that are looking decent in terms of valuation. And again, these stocks ideas are only for long-term fundamental investors and not for day traders looking for quick profit. The reason is that nobody can predict the stock market in the short term. This year would see the US Fed tapering down the interest rate, and that can result in volatility in the market. So these stocks are only for long term. Finally, before we proceed, remember that small cap sector is highly volatile. Any small cap correction in the market can result in high volatility in small cap sector. So invest wisely. Alright, let's get started. So first stock is based on the theme of cleaner fuel and reducing the dependency on oil. Recently, Indian Union Road Transport and Highway Minister Mr. Nitin Gadkari has mentioned that government is promoting ethanol manufacturing in a big way and assured that it will procure all ethanol produced in the country. Currently, the ethanol economy is around 20,000 crore, which I am targeting to take to 2 lakh crore. Now that's 10x of existing ethanol usage. He also said that the government is planning to introduce flex fuel engine vehicle with an increased supply of ethanol. With the rollout of flex fuel vehicles on 100% bioethanol, the demand for ethanol will immediately jump by 4 to 5 times. Currently, the ethanol blending in petrol is around 8%, and government is targeting blending at around 20% by 2025. So one stock that would benefit from this development would be Praj Industries. Established in 1983, Praj Industries is a globally leading company with a bouquet of sustainable solutions for bioenergy, high purity water, critical process equipment, breweries, and industrial wastewater treatment. Bioenergy segment include technology solutions for first generation ethanol that mainly include ethanol manufacturing using sugarcane juice. Then second generation ethanol that is derived from agri residues like wheat and rice straw. Praj Industry has also developed an innovative rain gas process technology to produce compressed biogas from solid organic waste as well as liquid waste at a low operating cost. Now just look at the order backlog of Praj Industries. There's an incremental rise in order backlog quarter on quarter. The latest order backlog for Q2 of FY22 is 2,235 crore. If you look at the order book, again there's an incremental rise in Praj order book. For Q2 of FY22, the order book is 745 crore. In the last 12 months, company revenue have grown at 86% and profits have grown 192%. Company is completely debt free, and the latest market cap of Praj Industry is around 6,150 crore. Currently, Praj is trading at levels of rupees 340. It touched a high of 407 and since then it has corrected 18%. At current levels, the share is trading at a PE ratio of 45 that looks reasonable considering the future growth prospect. Now, second stock in my list is based on infrastructure theme. Indian government has a lot of focus on building the infrastructure of the country. And within infrastructure, one sector that would grow at a very fast rate is piping sector. There are still a lot of problems with water supply and sanitation in rural part of India. Many people in India still do not have access to clean water. Indian government has launched various initiatives like Swachh Bharat Mission where it has allocated 1.14 lakh crore rupees over the next 5 years. Then the Jal Jeevan Mission would provide tap water supply to 2.6 crore households in India and Ministry of Housing and Urban Affairs has been allocated rupees 54,581 crore for it. Not only this, there would be high demand for water supply in the irrigation sector. And finally, you would need a piping sector in every house and building. There is a consolidation in the piping market where market share is shifting from unorganized player to organized player. Hence, it would create opportunity for companies like Prince Pipe to gain more market share. Established in 1987, Prince Pipe is one of the leading manufacturers of polymer pipes and fitting for plumbing, irrigation and sewage disposal. In the last 5 years, Prince Pipe profits have grown at a CAGR of 50%, which is simply exceptional. Company is highly profitable and has negligible debt equity of 0.14. Company is continuously expanding its product portfolio and its distribution network. It already had a strong foothold in North India and is now expanding to Southern India. Prince Pipe has recently started a new manufacturing plant in Telangana to expand in South India. Currently, Prince Pipe has a market cap of around 7,700 crore and is trading at rupees 700 at a PE ratio of 30, which is looking very attractive at current levels. The share has been in consolidation mode for a long time and I expect this company to outperform in the near future. Third stock in my list is based on the digital revolution theme and I've been very optimistic towards the digital revolution. Especially post-COVID where everyone has shifted to work from home, you can't work without technology. Technology is not just an option anymore. It is the core of any business in the world. And India is already a leader in IT services and this sector is the most promising sector in the future. Within IT, companies focusing on latest technologies like your cloud computing, artificial intelligence, machine learning, blockchain, advanced analytics, IoT are expected to grow at a much faster rate. And in this sector, within small cap, I particularly like Newgen Software. Newgen Software basically helps organization in process automation, content services and communication management capability to develop and deploy content-driven applications on the cloud. Just to give an example for better understanding, one of the largest banks in the US with around 240 branches implemented Newgen's commercial loan origination software to streamline the overall lending process. The bank digitized its lending cycle and automated its operation, enabling quick and hassle-free shift to remote working. Newgen is highly focused towards innovation and spend around 10% of its money on R&D. So far, company has filed 44 patents and has been granted 20 patents. One key feature of Newgen business is its annuity revenue stream, which is basically a subscription-based model where clients keep on renewing the subscription year on year. This annuity business has grown from 41% in FY16 to 57% in FY21. Company has a strong promoter base with top pedigree and top experience. Some of its marquee investors include MIT and Goldman Sachs India Limited. In the last 5 years, Newgen profits have grown at an excellent CAGR of 35%. Again, company is virtually debt-free with debt to equity of 0.04. Currently, Newgen has a market cap of around 4,000 crore rupees and is trading at around rupees 580. It has been consolidating for a long time now. At current levels, it is available at a P ratio of 27, which is looking very attractive. And considering the fact that company has a recurring annuity business due to its subscription model, it generates high revenue in the third and fourth quarter due to renewables of subscription. So I am expecting a good quarterly performance from Newgen. Fourth stock in my list is from banking sector. Post-COVID, banking sector has seen sharp correction and recovery in the banking sector has not been as good as the recovery in other sectors. And considering the fact that now economy is opened up and there is a significant amount of capex across industries, banking sector would be the key beneficiary of the GDP growth. So in this category, I would go with Federal Bank. Established in 1931 as Travancore Federal Bank Limited, it is more than 80-year-old bank. Since it started from Kerala, the biggest presence of Federal Bank is in the South India, but it has expanded to now every major city in India. Today, Federal Bank has a strong network with presence in 24 states and 1,272 branches. Federal Bank has a market cap of 18,000 crore and touched a high of rupees 108, and from there it corrected more than 20% and touched a level of rupees 80. From those levels, the bank has now recovered to current levels of rupees 88. In fact, this stock was trading at levels of rupees 80 a few days ago. And yesterday, the bank announced its Q3 number, where loan book grew by 12% on a year-on-year basis to rupees 1.43 lakh crore at the end of December 21, from levels of 1.28 lakh crore a year ago. Post news, the share jumped around 5% yesterday. At current levels, Federal Bank is trading at a PE ratio of 10. Yes, Federal Bank is available at a very low valuation. Its price to book value is just 1.07, which is looking extremely attractive. Federal Bank is among the top frontrunner in digital transformation and focusing on digital banking. Again, this bank has a top leadership and looking fundamentally strong. I have already mentioned about Federal Bank in one of my previous videos along with IDFC First Bank. Now, fifth stock in my list would benefit from the surge in total number of Demat accounts in India. It is CDSL. CDSL is India's leading depository firm that manages the Demat account of investors. In fact, there are only two depositories, CDSL and NSDL. So there is limited competition in this category. Recently, CDSL has crossed 5 crore Demat accounts opening. In fact, the Demat account opening has skyrocketed post-COVID due to the sharp rally in stock market and bumper IPO listing. And the IPO listing trend would continue to grow in 2022. Moreover, CDSL has an annuity-based model where it generates revenue on a regular basis. Although there is a slight risk of volatility in the short term due to cyclical nature of stock market, but the long-term growth prospects are looking very bright. CDSL also has its subsidiary that provides insurance repository services and commodities repository services. In the last 3 years, CDSL profits have grown at a CAGR of 25%. And in the last 1 year, the profits have grown at 77%. Company is highly profitable due to its asset-light model. And the company is completely debt-free. Currently, CDSL has a market cap of 16,000 crore rupees. It is trading at levels of 1,540. Although at current levels, valuations are looking a bit expensive at a PE ratio of 62, but worth accumulating for the long term. So in this video, we discussed about 5 small cap stocks that can create wealth in 2022. These stocks include Praj Industry, Prince Pipe, Newgen Software, Federal Bank and CDSL. Please note that I have focused on good growth prospects along with decent valuation, as valuation is a key parameter. Otherwise, if you exclude valuation, there are many great stocks in the small cap category. For example, you have Affle India, then you have KPIT, Borosil Renewable, but again, valuations are looking expensive. Then one stock that has corrected sharply and looks very attractive is CAMS. Being a leader in the RTA segment with 70% market share, CAMS has very bright growth prospect. It has already corrected more than 30% and is available at levels of rupees 2,700 at a P ratio of 48. By the way, in case you have recently subscribed to my video, I have already done fundamental analysis on all these stocks. And like I said, this is not the only list. I'll keep an eye on the Q3 results to keep you updated about the potential stocks in the future. In case you're looking for more such stock ideas, I've curated my list of top large cap, mid cap, small cap stocks, as well as theme based portfolios like top monopoly stocks, technology stocks, chemical stocks, etc. And I review them periodically. You can explore this list on my website. So tell me in the comment, which is your favorite small cap stock for 2022? And did I miss any stock? Let me know. I'll see you in the next video. Till then, take care.